Coin traders, Algo fam, what a day that closed for Algorand. Sorry I didn't get to this any sooner, but massive candle we had closed for Algorand, and made a tweet earlier talking about I really can't even remember the last time we've had a bullish candle this big. So even on the day, we almost had a Maribuzu candle, which is essentially where we don't have any lower shadow or any upper wick. And essentially this is one of the strongest types of bullish candles, because what happens is that we just have constant buying pressure the whole way during the amount of time for this candle period. And so obviously the flip side is true if it is a bearish Maribuzu and it is an extremely bearish candle. But we did get a little bit of a sell-off right towards the end, so did get a little bit of an upper wick, but that's okay because overall we saw just an enormous body. And so overall we were looking over 16% on the day. And especially this is significant and notable because let's go ahead and turn off the moving averages here. Look at just the 50. So zooming out a little bit, we saw a very nice level of support on this initial move coming off the start of the year. Broke it finally, and then middle of May had a rally and then got stuck up once again. That's why you can see this nice upper shadow or upper wick. And then now just finally in the current daily candle, we're finally able to see bulls on a lot of the bullish news coming in break this candle. So let's talk about the bullish news. So first of all, let's go ahead and talk about the Algo Kit that just released today. So we're looking at essentially a great way for a lot of development to start happening on Algorand. And essentially this is notable because we are going to inspire a lot of developers now to start developing more Web3 apps, which is essentially a very nice thing to have happen. And it will inspire a lot of growth and a lot of future adoption because we have such an amazing way to have developers be able to easily develop on Algorand and create a lot of those D apps and other types of projects. Now, the second thing that we had happen is that the Algorand Foundation has been talking about Algo Bharat for a long time, which is essentially the India team, and a lot of integration and partnerships over there as well. So it's great to have another big team in adoption and growth and all of that type of things that we actually need for a future coming in for Algorand here. Now, did want to go ahead and caveat this too for a tweet that I made earlier. And again, if you're not following me over on Twitter, drop me a follow at @coin_trades because we do talk about a lot of great things over here and have a lot of great discussions. So one of the tweets I made earlier is talking about how the pump that we saw is mostly been a news-driven pump. And in these type of markets where we see overall a lot of bearish sentiment and pressure, we know that these type of news pumps aren't necessarily sustainable. And we see this on the flip side as well. So any type of bearish news in an otherwise bullish market is only the catalyst for a quick dip and pullback, but yet we usually see a pretty quick recovery. So it's not necessarily a lot to sustain and continue a lot of that upside move. So that's why we do have to be a little bit cautious, and that's why we're going to start talking about some of the targets and some of the analysis for this chart here. So let's go ahead and talk about some of the first upside targets. And one of the big things that I want to look at is that let's go ahead and look at a very giant zone that we had, and we're going to go ahead and draw it out. So essentially it goes from 23 cents all the way up until about 24 cents. So if we zoom out, you can see very big period of support and resistance. And this is extremely significant because even on the first initial move coming off the start of the year, big point of resistance, flipped it into big point of support, broke it, and then now we're finding it as resistance once again. So that's a very big target. And if we actually draw a little bit more of a price level into the middle of or the end of November, then you can see we're looking at just up to the 25-cent psychological level, which we know has been a very strong level as well. But mostly importantly, we can look at 23 to 24 cents as being a very big zone, which we're going to need to see bulls show that continuation and follow through in order to get above, because ideally what we would have happen in that instance is then seeing the bulls rally, show that continuation. And it's okay right now if we do get stuck up at this level a little bit more, as long as we do continue to set those higher lows and actually see the strength building up on this zone to ultimately break it and then ideally be able to maintain it as support before rallying up and breaking these previous highs above the 30-cent level. Now, I do want to switch over to the 2-day chart really quick and do have the exponential moving averages turned it back on. So you can see right now we're looking at getting smashed on this 50, which also was a period that we got smashed up against on the previous run. So we can see big zone of resistance in between these exponential moving averages as well. But thankfully, we're actually breaking above the 26, which is hopefully going to create this nice zone of support, especially since now let's go ahead and clean this up. especially since now we can actually go ahead and sit on top of this previous level of closing resistance. So ideally, we would create a little bit of a zone over the next couple of days if that does in fact happen. And so even if we do see a little bit more of a pull-off, would ideally love to hold above 21.5. But because we had such a strong day, I don't think we're necessarily going to be seeing that right now unless we actually do get a lot of bearish catalyst news. And so flipping over into the weekly chart now, and you can see the similar things about the exponential moving averages, and specifically right now we are getting stuck back up at the 12 period. So let's go ahead and turn off the 50, zoom in a little bit more on this chart because we do have big level of closing resistance week over week on this 12 period, which was previous support. So we know that that's going to be extremely relevant. So we have big resistances overhead at the 26, and then also since now we rejected from the 26, fell below the 12, we are finding that as that big point of resistance. So ideally, we do have just a little less than 4 full trading days left, but seeing such signs of resistance overhead below that big zone, as well as a lot of these exponential moving averages, means that the bulls aren't in complete control just yet, especially since on the weekly, we are starting to form more of this bull flag type scenario. So we do need to start seeing a lot more upside pressure, breaking above this upside resistance point and actually getting a lot higher up into the Fibonacci retracements. So from the top where we had our high, you can see that if we actually draw this down to our low just right around the 18-cent level, we're currently bouncing around the 50% retracement, which is where we're getting stuck up at. But if we actually look at the bodies of these candles, we're mostly sitting inside below the 38.2% level for this Fibonacci. And so like we've talked about before, we're going to look at the first initial move when we talk about finding our low right at the end of last year and then retracing, because we typically do see a retracement quite far, especially to confirm that we are seeing a higher low and a bigger bottom come in. So like we've talked about before, when we look at the amount of retracement that we've seen, we actually pulled back below the 78.2. So that's a normal level to retrace to coming off of this high. But on the flip side, that also means it's a little bit less likely to actually run up and see an immediate new trend high in the short term. So likely what we do set up for is, even if we do get a little bit of continuation, likely I would expect a little bit more resistance on these exponential moving averages, ultimately setting a little bit of a lower high compared to what we've seen, and then starting to tighten up a little bit more in the longer term as well. Right now, altcoins are not in the spotlight, and we actually haven't seen much strength out of them at all. And that's especially true for Algorand. So as much as we do appreciate bullish news like we've seen today, we still can't flip the switch to be completely bullish because that's not what the charts are saying right now. Now, one thing that I actually do like, though, on this weekly chart is that we are starting to form a pretty nice trend line, both in terms of bodies as well as in terms of levels of price support. So as long as we do continue to maintain this trend, then it's going to be a lot better of a more realistic chance and scenario that we're actually going to run up to test this high right around 28 cents and then break that level, because that's just the ultimate key critical level right now, especially for this weekly chart, especially since you can see that looking left, big point of support before we had our November flush. So especially if we can run up to this level, pull back, maintain this level of trend support, we would start to form then in that instance an ascending triangle, which typically does favor a bullish breakout. So now one thing that I want to do that we don't typically do is actually talk about the Algo Bitcoin pairing. So we're going to start off right now with the weekly chart, because I do want to see how, just obviously we've been kind of at all-time lows right now in terms of Bitcoin pairing, especially with Bitcoin being the lead right now for a lot of this movement. So it's not necessarily out of the picture thinking that we're going to get stuck in this trend. But overall, if we talk about potential price action to the upside, we know that we have been getting stuck up at the 12-period exponential on this weekly. So that's a very nice target as well. And even if we do look, that would align with a previous level of support right around just below the 1,000 Satoshi level. But if we actually go ahead and flip out of the log scale back into linear, then I do want to talk about a very nice trend line or falling wedge, basically, because we've been setting up in this pattern for an extremely long time, basically since the middle of 2021. So essentially what we know is that these patterns do play out for a long period of time, but usually we do get a very nice bullish breakout from it. So especially since we are approaching the apex, which would be coming in about the start of May, so we could still have another month potentially, but I would still expect that probably in the next couple of months, we'd see a nice altcoin performance, especially since we have been getting overextended on the Bitcoin dominance. So typically what that does mean is I would expect a lot of money to flow out of Bitcoin and into the altcoins since they haven't had their move and pump just yet. And I would expect that that would be the catalyst that actually pushes this Bitcoin pairing up and actually starts to change the trend on these exponential moving averages to get a little bit more of that bullish cross coming into this year. But again, we know that after periods of pullback, we typically go into a couple months of more or less a bear flag before pulling back again. So that could also be a potential pattern that we're looking at. And even in that instance, that still technically would be a bull break from this falling wedge pattern. And that's typically the way these wedge patterns work as well, is that we don't necessarily have to get an immediate pump and spike just because we're breaking out of the resistance trend line. So switching into the hourly right now, we have lost the hourly uptrend. So that does mean we are looking at a top coming in. And so that's why we do start to look at the 4-hour then to be able to set our higher low and ideally go into a period of consolidation as well, being able to hold a lot of these supports, which right now we're looking at 22.5 as being one of the lower downside targets. We look at volume really quick, we can see that we've already hit our big climax in bull volume, which actually wasn't even the high of prices that we have seen. So that's another indication that we are likely have already seen our top, which again smashes right up against the 24-cent resistance line. And so when we see peak volume come in, prices getting stuck up at previous rejection points, and then also if we pull up RSI, we are getting overextended. So those three factors right there between resistance, tested again, big volume climax coming in, as well as now seeing extreme overbought levels. So if we actually zoom out, we haven't seen this level of overbought since basically on the initial move off the start of the year. So that could be a very similar type pattern that we see play out. And that's why I am thinking that right now at this point, most of the main volume and momentum for this move has come in, especially on the backs of a lot of this good bullish news. So right now, it's really going to come down to where the bulls can defend and where they can hold support, and then also whether or not we can go into consolidation and see a little bit more of that follow through, or whether or not we had another repeat of this type of instance where a quick run up, but then also a quick flush and retracement. That's obviously not going to be the best sign, but in the event we do see that, then that's pretty much going to confirm a longer term downtrend where I would expect then in that instance us to test this 18-cent support level. Once again, we're never trying to be predictive. We're always trying to be reactive. And that's why we talk about different scenarios. So that way we can understand what happens in every type of possibility. And that way we are prepared and can potentially have a plan in those instances. But as always, would love to know everyone's thoughts down below in the comments sections. Do love getting back to each and every one of you over there. If you did enjoy the video today, please hit the thumbs up, like, and subscribe if you have not done so just yet. Otherwise, stay safe, take care, everyone, and I will catch you back in the next video.